Good afternoon. Hi, Kate. How you doing?
Doing well.
Good, good. Appreciate the opportunity to have a intimate conversation about something I think is very opportunistic for a lot of small businesses around something that most of them don't really know about. It's kind of interesting in the past several months since we started a conversation, Kate, that very few of the clients we talk to have any understanding at all about R&D tax credit opportunities. So it's this session should give us an opportunity to really kind of at least establish the process that might be should be under consideration and talk a little bit about what the opportunities are is what I'm hoping we get out today. Does that sound like a plan?
For sure. Depending on everyone's, backgrounds and prior knowledge about the research and development tax credit, I can definitely tailor a little bit of what I'm going through today. So that way it will be the most useful for everyone. But to start off with, I will probably just do sort of a quick overview of, what the R&D tax credit is, at least on the federal level. There are also 35 states that have their own version of the R&D tax credit, but this will be sort of a quick overview of the basics and we can go from there. So yeah, I guess we'll hop right into it. And of course, shoot over any questions. Happy to, tailor the presentation based on those. So, I should introduce myself as well. My name is Kate Collins. I work with Strike Tax Advisory. We specialize in research and development tax credits. We also work with the employee retention tax credits as well. And I am going to be using our site as an aid in my presentation here. Just helps to have sort of a visual up there. So to start off, to go through the research and development tax credit, really what it comes down to, I sort of break it into three parts. You're looking at, is your company doing what the IRS qualifies as research and development activity? How much expenses are being dedicated to that research and development activity. And from there, you can calculate the credit, which just as a quick preview, the credit is non-refundable. So you do have to have a tax liability to offset, but it can be rolled forward for up to 20 years. So it's a great, it's a great thing to have in your arsenal. So as far as what qualifies as R&D work, the IRS has this 4-part test. So it's can be a little esoteric. I will walk through it and then I'll provide some examples along the way. So that way it'll be a little more, put it into a bit more of a real world context. So part 1 is purpose. And you're looking at the technical version of it is the research must impart new or improved functionality, performance, reliability, or quality to a product, process, formulation, invention, software, technique. Which that is a total mouthful, but really what this breaks down to in the real world is your company developing something new or improving on something that already exists? And is this development new to your company? It doesn't have to be new to the world or new to the industry, but it does have to be new to you. And that thing, as alluded to in this rule here, can be pretty far ranging. It could be anything from, a cosmetic formulation, a manufacturing process, a piece of software, if you're building any new piece of hardware or improving on a piece of existing hardware that you manufacture or design, that all falls under this first rule. The second part of this 4-part test is technological. And basically what the IRS is looking for here is that you are using a hard science or engineering to do your research and development. So sometimes this can break down into a slight gray area depending on what we're talking about. And in which case it'll be broken down into what's hard science and engineering versus not. So if we're talking about a piece of software, when the IRS is looking at that, they'll be saying, all right, well, you're developing this new feature. The actual engineering of that new feature is part of this technological rule, but a lot of the front end work to make everything look shiny and nice, that falls under sort of a more sort of artistic category, and that specific part of the application would not be research and development. So things that are the only thing to keep in mind with this part here is I guess things that are more on the purely visual visual or design side oftentimes do not fall within this bucket. And the last two parts of the 4-part test are pretty connected. So when we're talking about experimentation and eliminating uncertainty, basically it's getting to the core of what research and development is, that you're tackling a problem that you're not exactly sure how to fix, but you are trying different things, you're eliminating different options as you go along, and you're experimenting and trying out new things. So, if you kind of knew, hey, we have a problem and we know exactly how to solve it off the bat, it's just ABC, you're probably not doing R&D in the first place. So that's what this experimentation and eliminating uncertainty, those two rules go for. So these the 4-part test put together: purpose, technology, experimentation, and eliminating uncertainty. If your if your project or initiative fits all these 4 rules by the IRS's qualifications, it counts as R&D work. So that's when you put all those 4 rules together, actually quite a large range of different things can fit under R&D. And of course, if there's any questions about specific projects or developments of, hey, would this fall under R&D? Happy to talk about those in particular.
That's fantastic. I think the angles associated to this are hard for everyone to understand what needs to be looked at. How do you recommend that people begin to make that discerning understanding of what's going on there? What kind of resources are necessary to help assess this as to whether it's pliable or not?
Well, not to be too much of a, self plug here, but that's part of what I do every day. Basically talking to people from different industries, from different companies, and, just walking through, what they are building and improving on in their company, and figuring out, would these qualify under the 4-part test in sort of a 10,000-foot view general sense. Of course, the tax credit studies themselves, when you're digging into calculating the credit, it's a much more granular look. But I'm always, it's an open office for me. I will give my contact information out here as well. Also my coworkers, the whole Strike Tax team, were basically available to talk about these things all day. And it's, it is just sort of an open collaboration of trying to figure out, is there research and development there? Okay, I do see so we have a question coming in. Do you have an example of what type of businesses would R&D tax credits apply to? So quick, this isn't really a sidetrack, but I guess quick aside here. We do have a lot of industry pages up here that walk through wider industry categories and, smaller sub-industries within those categories that do fall into R&D. I will highlight a couple of industries that typically do not, don't jump to mind when you're thinking of R&D tax credits, but are actually great fits. So for instance, a lot of architectural and engineering firms are typically great fits for R&D work, because every time you're developing a new project for a client, whether it's a building or, for instance, a large scale HVAC system for commercial buildings, something like that, you're having, even though it's using existing materials that you've worked with before, you're having to design a new application for, that specific project. So this, with architecture and engineering, I would say it's mostly focused on, especially when people are looking at commercial clients. So we're not really focusing on, let's say, somebody building, house number 54 in a tract housing development. It's more of a, let's say, if you have to design a lab building on a college campus, something like that. The whole thing from designing the building, having to design the building for the specific site, HVAC, plumbing, electrical, all of that is custom work for that specific project that would fall under R&D. Another industry that would be really great to highlight is probably a lot to do with the food and beverage industry. We worked with a lot of companies that are, distilleries, breweries, food manufacturers and packagers. Another thing to touch on, talking about the R&D tax credit, this first rule that I touched on, this purpose, when we're talking about creating or improving a product, process, formulation, invention, software, technique, that also includes manufacturing processes. So if you're a food packager and you have to figure out how to make your line more efficient, and increase the throughput of that line, and you're testing out different configurations of where employees are, what machinery you're using, how exactly you are manufacturing or packaging a specific product, that also falls under R&D. So there's those are, I think, a couple of the top examples that I would like to throw out there. But if there are any questions about specific industries, I dig into those as well.
Yeah, so it sounds like another supporting angle to that may be the cannabis industry that is very prevalent in across the country today in 38 states. It sounds like it would be in the same boat because it's similar to the food industry and how you have the same activities and processes in there of formulating and going through your manufacturing and your processes to that. It sounds like that may be also a nice interesting industry.
Oh, I would love to go on a hemp and cannabis tangent, actually. So our president, Tyler Kem, actually his previous firm was called Hemp Tax, and it was specifically focused on hemp and cannabis tax credits. One thing to throw in there about specifically cannabis tax credits, and we're talking about products with THC, not just CBD in them. Those, since THC products are not legal at a federal level, they aren't applicable for the federal R&D tax credit. However, in states like California, where we do have state regulated THC products, you can actually get the California state R&D tax credit if you are, let's say, a cannabis grower that is producing THC products. So that's kind of a cool aside. But yes, hemp and CBD, since they are federally legal, they're great candidates for the R&D tax credit. Everything from developing new products to producing tinctures. There's a whole and also the agricultural side of it as well. Agriculture is a huge area for R&D tax credits as well. So another basically a bunch of different industries you touch on, as soon as you start talking about them, you go into rabbit hole. There's a lot of R&D out there. Here's another. Sorry. Do you want to go ahead first?
No, go ahead, please. Yeah.
So I see another question here that says, does it matter what size a business is to receive R&D tax credits? No, there's it's down from, I have worked with clients that are basically, a single shareholder S Corp, and they're, building a piece of software that they are selling to companies and they qualify for R&D tax credits, all the way up to, the Microsofts and Amazons and Apples of the world. They take advantage of the same tax credit. So if you are doing R&D qualified work, whether it is a one-person shop or, a 30-person company, or you are, an Amazon, you still can take advantage of the R&D tax credit. One thing to mention about smaller businesses and newer businesses that are taking advantage of the R&D tax credit is the payroll tax credit, the payroll tax offset. So like I mentioned before, with the R&D tax credit, it is a non-refundable tax credit. So you do have to have tax liabilities to offset. Usually that means business income tax. However, if you are a company that has had 5 or fewer years of gross receipts, and annually you have under 5 million a year in gross receipts, you have an additional option available to you, which is offsetting basically on your timely filed tax return. When you claim R&D tax credits, you can set aside a portion of those tax credits to specifically offset your quarterly payroll tax. So it's a way that if you are, you're not currently profitable, seems like you're not going to be profitable for the next year or two as you're getting your business started up, and you're probably doing a lot of R&D at the same time. This is a way to take advantage of the R&D tax credit while you're still working towards profitability. And it's a really great option to use those tax credits more immediately.
Yeah, I think it's important in all of my endeavors in discussing things. A lot of people don't quite understand the difference between a credit and a deduction. Is there? It might be good just to kind of highlight that a little bit, I think.
Right. So actually, that brings me back to I have quite a habit of getting sidetracked, especially when it comes to R&D tax credits. There's so many interesting little nooks and crannies to dive into. But going back to sort of those main 3 points I talked about, basically saying, what is, what qualifies as R&D work? How do you calculate your what we call qualified research expenses or QREs? And then how is that applied? What's the path to utilization for your company? So we kind of went through that. We already went through that first part, basically talking about the 4-part test. That's how you determine whether or not you were doing R&D work in the first place. That second point I talked about, or I want to touch on, is basically looking at the expenses. So, if you're at the point where, yes, we have definitely done R&D work, how do we know, what our qualified research expenses are, which is very important to know because that's how you calculate your credit. It's the first part of it. At the end of the day, for the qualified research expenses, it really is mostly a labor-based tax credit. And we're talking specifically about U.S. domestic labor, whether that labor is from an employee of yours or maybe a 1099 contractor who is working on, a product you're developing. And so for your qualified research expenses, you're going to be looking at U.S. employee salaries, U.S. subcontractors, and also any dedicated R&D supplies. And they do have to be dedicated to R&D. So for instance, let's talk about that manufacturer. If you are trying to improve your manufacturing process, you can't say, well, all the machines I use on my manufacturing line are now R&D expenses. They aren't, in that they aren't limited to the use of R&D. But for instance, if you had to, dedicate a certain amount of supplies to test out different methods for R&D, let's say if you were working on that, like for instance, a cosmetic formulation and you were developing a new skin cream or something, all of the supplies that were put towards, solely, doing the test batches for that new cosmetic product, all of that would be counted as R&D supplies. So it is basically labor plus R&D exclusive supplies are your qualified research expenses. And to cut to the utilization portion of it and basically how the tax credit works, there are a couple more complicated ways to calculate the R&D tax credit. It's a little, I don't think it's worth going through all the technicals at the moment, but at the end of the day, for the federal R&D tax credit, it's about 10% of those qualified research expenses that go that you get back in the form of your R&D tax credit. And as I mentioned, it's a non-refundable tax credit. So you're not with the tax credit, as I mentioned, you have to have liabilities to offset, whether that is in the form of a corporate income tax or as I mentioned before, for the quarterly payroll tax offset, if you do fill those requirements of fewer than 5 years of gross receipts and under 5 million a year in gross receipts, you can actually take a portion of those that quarterly payroll taxes that otherwise you would have to pay.
Right.
Yes.
Which is, yeah. So that addresses the cash flow issues with a startup like that in that sense. And I appreciate that. But the credit side of things, I think it is important to reemphasize that it is a credit. So it reduces your liability. It's not something you write it that the government writes you a check back for. That's really what you're saying.
Exactly.
Essence, right?
It is not a refundable tax credit. So it's not a check in the mail. It is just like you said, Tracy, a reduction in your tax liability.
But the beauty is if you have liability a little bit this year, and you can't cover it all, you can carry it over for 20 years. That's the beauty of this, right?
Exactly.
Well, it doesn't go away, and you can keep compounding it with adding over the next whatever years you have. Every year you can add to that. It's just a matter of how much tax you have versus liability. Versus the credit, and then you can carry over. It's a great for those that don't realize it. It's very, it's incentive to have companies look and execute their own R&D capabilities, invest in the technologies that are there, and to drive that. I think it's a great program. And I think a lot of small businesses don't really realize that they are easily in line to be exercising this, and don't always know from their financial services people. Kate, I know we're 20 minutes into this, but I'm curious, you may have some other things to go through, but I was curious if we could maybe touch on one of your experiences with clients who may have thought they didn't have an opportunity. Maybe it was the size of the company, like we were asked earlier, or an industry that they didn't think would have any exercisable credits. And so after working with them, they found that they did have, in fact, those things, and what that might look like. Kind of helps people see what's possible by doing that exploration with you guys. Is that something you can do?
Sure. I think a great example that I've come across recently was a client that we're currently working with, is a small, basically a marketing company that had worked on developing software. And actually, at first glance, originally we didn't think that they would probably have a lot of credits because they worked with a lot of overseas contractors to help develop the software. But one thing that we didn't estimate kind of coming into it was the amount of time that the owner spent developing that product himself. And basically because of, the wages the owner received, since, he was a single shareholder of the company, those ended up counting towards R&D, those qualified research expenses. So that was, it basically turned the whole thing around from having, very few qualified research expenses to quite a bit because of the specific setup of that company and the involvement of the owner. So it really is a highly individualized situation, which is one of those reasons I always suggest, getting more information, talking to someone. You're welcome to chat with us, because, there are cases where, even on first glance, we would say like, you probably don't have a ton of credits there. But once we get into a, 10, 15-minute conversation, it becomes clear that there actually are more credits to recover in their specific case.
Yeah. So a lot of times, smaller businesses, growing businesses will have their own accounting functions, or they'll have their own accounting consultants. Do you find at times that those accounting organizations have a solid knowledge of what you guys carry, or is yours highly supplemental to what they're doing?
It's a broad range. I think a couple years back, it was a lot more common that you would, engage with CPA firms or whoever was doing bookkeeping for a smaller business that, they would not be too familiar with the R&D tax credit. I would say now it's become a little bit more known, but a lot of times, a lot of people will not want to touch it in the sense of they're a little, it is a more involved process to have to go through. And just to give you a kind of peek into the mechanics of how we conduct the tax credit studies, it's a whole process of isolating which, each R&D initiative that it has occurred, and building out a timeline of who's been working on it, when, and what time they've spent on it. So it can be a little bit of a, intensive process to build out that study. I mean, that's why we're able to, focus on doing it all day. It's not, typically CPAs have, 500 other things to worry about, and this is not exactly on the top of their list. So our position and, the area we try and occupy is basically to make, the accountants' lives easier. We're here to do the tax credit studies and kind of swoop in with the pro forma documents ready to be submitted. So that way it takes something off their plate. A lot of times CPAs we talk to, they'll either say, yeah, but basically they think the juice isn't worth the squeeze, or, it's just maybe not their area of expertise, and they would prefer not to, wade into waters that are not familiar to them. So that's where we come in.
Yeah, it's very similar to what IMSM is, and a consulting organization that's very specialized in their area and have deep awareness and knowledge that can help an organization get the most out of the particular service that you're trying to employ. So you're basically engaging with an expert in that area that can dig around in all the crevices and find the proper connection. So I appreciate you saying that, because I think it's an important ingredient in all of this as people are beginning to look at the potential in that, or seeking that. You have a unique business model that I think would be excellent to communicate to the organization as well.
For
So
sure.
to anybody listening, and that's because I think it'd be important if they're going to look at investigating this, leveraging what you guys bring to the table might be of high value for them to understand how you get engaged.
Yeah. So, the quick pitch here is that basically we work on a 100% success-based fee. So we're not getting paid until you realize the credit benefit on your end, which is just a really great model because it aligns everybody's interests. We want to make sure that you recover the maximum credits that you're entitled to. And we're not, we're only working with people who we believe that they have a good amount of credits to recover, and they also are able to recover them within, a decent amount of time. But we work with clients who, for instance, take that payroll tax offset, what I have up on screen up here, and they're taking that for a year, and maybe it takes them a year or two to use the rest of those credits towards corporate income tax. So we have kind of a more investment mindset with our clients. We're really looking for companies that are doing great R&D. We believe that even if they're not profitable now, they'll be profitable in the near future and be able to utilize those credits, because we don't get paid until you're able to use the credits. The other thing I will throw in that's very important about our model is that we do have comprehensive audit support. So long and short of it is for the R&D tax credit, in general, you're not really increasing your audit risk. We found about a 1% audit risk for claiming R&D on timely filed returns, and around 2% for amended returns, which is pretty standard across the board. However, we're always there to defend defend all the credits we've calculated and be in your corner if there are any ever inquiries from the IRS. Just because the number of clients we've worked with, we have had several inquiries and have had to deal with audits, but we've always been able to defend 100% of what we've calculated. So that's part of the deal too. We're in for the whole thing.
So a win-win for anybody that's thinking about this. You have a no risk competent capability here, that if you are an organization, you've made an investment in an ISO solution, for instance, to help your organization improve their processes, and you've got other potential R&D context, reaching out to Kate and her company is, vitally important. You may find yourself winning a lot of money back by focusing in on this at no risk to what you are looking at potentially gaining. So great conversation. Kate, what else can we end up with that would give some good information out to the audience here, and before we close it out?
Sure. Well, I would love to highlight two more things from our site. So one is, let's see if we have, one is we post these on LinkedIn as well, but we do have a journal or blog of sorts where we do have a couple some really great articles about the research and development tax credit, as well as the employee retention tax credit that are updated. And the other thing I'd really like to highlight is we have this nifty R&D tax credit calculator, which is really great. So basically this is a it's sort of a fancier back of the napkin calculation where you can punch in your gross expenses of wages, U.S. contractor payments, and supplies. So if we just sort of test this out here, punch in a cool million, you can put that in for several past years, which I don't think I mentioned this explicitly, but with the R&D tax credit, you can go back and amend all open tax years. So you can go back up to 3 years and amend your previous returns to capture the maximum credits possible. So that's also great. So you punch in your, sort of the top line spend on employees, contractors, and supplies, your state. And, we talked about architecture here. So say my industry is architecture, and it gives you sort of a wide range estimate of what you'd be looking at for federal and state tax credits. So, if after hearing this presentation, your curiosity has been piqued and you're just sort of wondering, what could be on the table, this is sort of a great place to start and get the gears turning. And, we'd be happy to chat with you from there.
That's fantastic. That's really valuable.
Yeah. I don't know if there are any other questions, but obviously happy to answer those as well.
Anything else? Anybody have any lingering questions? You can answer it now or reach out to us at some point in the future. If not, I know that we need to close this out. So I'd love to have anybody reach back out to IMSM, or we can get you in touch with Kate, or you can reach out directly to Kate's organization and start your investigation. Who knows? You might find money that you can recover and do what you need to grow your business.
Exactly. And we're just at striketax.com. And if you want to reach out to me directly, it's just Kate, Kate, at striketax.com, and just shoot over an email.
Well, we really appreciate it. Since we don't have any more questions, Kate, I want to tell you thanks a lot for this. It's always a pleasure to talk with you, and I look forward to continuing our partnership as we move forward.
For sure. It's thanks for having me on. This was a lot of fun. I always like talking R&D tax credits. So.
Yeah, it actually makes taxes, I think, kind of fun when you can get into these things and try to find help. Leverage the thing.
A lot more fun to talk about when the idea is getting money back. So
yes, I agree. So hey, I appreciate it. Thanks very much. Well, with that, we'll end it. Okay.
All right. Sounds good.
Thanks, everybody.